Welcome to the Mortgage Rate Weekly Mortgage Market Update for the week of August 15th, 2016. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you an update. Well, last week was a good week for mortgage rates. If you take a look at the bond chart on the screen, you can see mortgage rates were able to find a bottom, and then they were able to bounce off that bottom and move higher. So the short-term trend is for bonds to move higher. We are up against the 25-day moving average, which is, you can see right there on the screen. We broke above that, but then we broke below and broke above. So we've been moving back and forth, up and down above that 25-day moving average. If we can get above the 25-day moving average and stay there, that'd be a good sign. We're right about there, so we're going to recommend floating your mortgage rate to start the week to see if we can rally off the 25-day moving average. If we break below it and sell off, we will quickly switch to a locking stance. So we'll keep, stay updated on that. Now, in the economic news, we had retail sales for July 2016 released last week. It was very disappointing. It came in flat, 0%. They're expecting a 0.4% increase in retail sales, but they came out flat. But on a brighter note, retail sales were up 2.3% year over year, so that's good. Then we had the Bureau of Labor Statistics report that the hourly wage compensation decreased by 0.4% in the first quarter of 2016. And that as opposed to the originally predicted 4.2% increase in wage compensation. So wage compensation for the second quarter of 2016 also decreased, but by a greater amount of 1.4%. So that's not good economic news. If wages are decreasing, that's going to lower consumer spending ability, and that can be a drag on the economy. So we'll have to keep a lookout on that. Then we have weekly initial jobless claims released on Thursday, and it showed 266,000 jobless claims for the week, down 1,000 from the previous week. Overall, supporting a very good labor market, been below 300,000 claims for a very long time now, so that's a good jobless claims report, anything below 300,000. And then we had the Producer Price Index, or the PPI, for July released last week. That's a measure of inflation at the wholesale level. That came out very tame, showed a 0.4% decline in inflation. So tame inflation is very good for mortgage bonds. That's why that's great news for mortgage interest rates, and that actually report came out. We saw that mortgage bonds kind of rallied on the low inflation at the wholesale level. And then in housing news, big bill signed by President Obama for FHA loans. House Bill 3700, which is the Housing Opportunity Through Modernization Act, is reforming the condo approval process for FHA loans. This is big news. The bill has three big things. Requires regulators to rewrite the rules for condos being approved for FHA financing. The highlights are, number one, they're going to lower the required owner-occupant condo units from 50% of all units to only 35%. That's huge. Second thing, they're going to relax the rule on condos charging transfer fees, because if a condo charges a transfer fee when it changes hands, it's not eligible, so that's going to go away. And then number three, they're going to simplify the recertification process that must be done every 2 years. Right now, it's an onerous process, so even the ones that get approved, if they don't go through the recertification process, they lose their approval. So they're supposed to be simplifying that. So great news there. In the local news, we got the next first-time homebuyer seminar this Saturday, August 20th at 10 a.m. in Newark, Delaware at the Christiana Hilton Hotel. If you'd like to register for that event, you can call us at 302-703-0727, or you can register online, www.delawarehomebuyerseminar.com. Look forward to seeing you guys next week.